Do a formal introduction, even though you was having a conversation about, hair extensions and, stuff like that. But this is a serious conversation today. But I'm glad you guys tuned in today. First and foremost, you know me, DJ KO. Welcome to the Closely Distinct podcast. I'm glad you guys tuned in. You guys get a hand clap. Yes, you get a hand clap. It's a beautiful Monday morning here in Houston. It's a little over 50 degrees,
It's nice.
It's like, if you want to do, let me see, if you want to read a book, drink some red wine, maybe go look at the water. Not Galveston water. That water is something else.
Chocolate milk.
Yeah, go to Amazon and look up the water. And but it's a beautiful day. I'm glad you guys tuned in today. Today we have a special show for you guys. It's a topic that's been going on for the last week, and a lot of you individuals, a lot of people that have what we call money are concerned, because we are concerned about our money because we work hard for our money, right? And we want to know where we're going, especially for you individuals that invest, that bank, that depend on banking to receive these resources. So this show is for you. But anyway, before we get started, I'd like to thank all my sponsors, thank everybody that tuned in, thank everybody that tell a friend, that told a friend, that told a friend. I appreciate you. I love you guys. We're going to continue to do this thing. But today we have a special guest. And this individual, she came on the show before, but she was a different person, right? She was a different person. I didn't notice who she was when she walked in. I thought it was
I switched my costume.
That's what it was, a costume?
I had a different costume on.
See, that's the benefit women have. We don't have that benefit, what I'm saying, as men, but it's beautiful.
Change it up.
It's beautiful, though, by the way. Everybody, I'd like everybody, welcome to the show, Miss Zsaqeuz Jordan. How you doing, ma'am? Yeah, I got it. That applause. Yeah. So last time you came,
Thank you for having me.
Oh, look, last time you came, of course, the studio was different.
Yeah, I like the new layout.
Yeah, when I have VIP guests like yourself, I have to, they have to feel comfortable. You know what I mean? Because I had that hood,
relaxed.
I had that hood set up early last time.
Yeah, this is very VIP.
Yeah.
VIP.
That's what I'm. Shout out to VIP, y'all. Shout out to VIP. So, but on a serious note, how you been?
I've been doing great. It's been a very busy time, obviously.
Mm-hmm.
There's a lot going on in banking and the economy, so it's been a very busy time for us bankers.
Yes, absolutely.
Yeah,
and that's what I got your ear for.
Happy to be here to talk about it, make sure we are in the know of what's going on out there.
Absolutely. And when you say we, who are you speaking about?
I would say
us, people, the banking community.
People in the banking community, people of color, specifically.
I love it.
It's important that the everyday consumer is aware of what's going on, how the 2023 banking crisis impacts us. And we hear a lot about it right now in the news and the media. So just want to make sure that we can have good dialogue and understand how that is really going to have an impact, and just answer any questions that you may have heard from the people and the things that I'm hearing as well.
Yes, absolutely. Yeah. This girl is media trained. That's what I'm talking about. Shout out to being media trained. I like it. I like the answers. So look, Zsaqeuz, so you've been paying attention to the news, and of course, and most of the people that have been paying attention to Bloomberg News, NBC, you notice that Silicon Valley Bank was shut down. Signature Bank was shut down, and it's also a warning for a couple of more banks that may shut down. So what are your thoughts before we get started? What are your thoughts on that?
So, a lot of people were frightened, right, by the closures of those banks. And so a couple things that we want to be mindful of and think about when we think about those two banks. So Signature Valley Bank was a bank that was specifically or targeted mostly technology firms, right?
Yes.
Startups, VC banks, companies, things like that. And so that were very highly concentrated in those areas. And then Signature Bank, a lot of crypto companies, right? So they are very highly concentrated in specific areas. So whenever you have a bank where a lot of their capital comes from one particular area, right, then they have overexposure to those areas. And so, right, we know there's been a decline, or a lot of instability around crypto.
Yes.
And then there's been obviously also we've seen the same thing happen around technology, right? So we had a huge explosion in the tech industry early on, and now we've kind of seen that start, I wouldn't say a decline,
Right.
but level off, right? So as that's happening, right, you're going to see different exposure. So when you have a bank like Silicon Valley that actually became the 16th largest bank in the country, it used to be a smaller bank, and regulations changed in 2018 where they don't have the same oversight as the larger banks. So they weren't necessarily being reviewed by the same regulations that the larger banks have. That's how we ended up in the place that we are today.
Right.
So
Right.
a lot happened during that whole process where the government did come in, ensure that all of those customers did receive all of their deposits beyond the 250 that the FDIC insures. So a lot happened to ensure that we could, keep the stability in the market. But I know that's also caused a lot of instability and uncertainty around the everyday consumer.
So I had a couple of buddies that had their money in Silicon Bank because they're part of these large shell corps, and they have a lot of money in it. And when that hit, I think it was 50 billion, something like that, the number that was in the bank. The money that they had in there, they sent everybody emails stating that, all right, your money is only insured for 250,000, right? But we're unsure
What's going to happen?
what's going to happen with the rest. So imagine if I had $10 million in there, and you tell me I only could get 250,000. Imagine, because I heard, I don't know how true this was, but I heard on the news, people was like standing in front of the bank, like physically saying, we want our money.
So I don't know about that part of it, but what happened, so a bank run is anytime that the consumer goes to withdraw their money. So back in the day, it would literally be people standing in line,
Right.
going to get their money. Years ago, I think back in the early 1900s, J.P. Morgan, in order to ensure that didn't happen, they would have tellers counting money very slowly to drag out their process.
Got you.
That doesn't happen anymore. Technology has changed
Correct.
that, right? And so people were literally they went online or called in to have their money wired out. So that's what happened. There was a scare because the banks saw an opportunity to do investments in bonds. But as rates went up, those bonds didn't have the same value. So when Silicon Valley needed to raise more money and the consumer found out, they were like, wait a minute, they're raising money. That made them afraid. And so as everyone's having these conversations, they panicked and they withdrew all their money, that's what happened to the banks. They had a bank run, but in the age of technology, it was fast. It was very quick.
So let me ask you this speaking of technology, because I noticed that you mentioned technology a lot. Does technology really impact banking in today's day?
Absolutely. Absolutely.
Okay.
You think about it, right? There was a time when we literally had to get in our cars and drive to the bank
Yes.
and do a withdrawal.
Yes.
Today, it's literally clicking buttons.
That's true.
Right? We just click buttons and that money comes out. So that puts the bank in a different position, right? Because now, just overnight, billions of dollars can be taken from that institution.
Right.
Just the money can go in, money can come out just as fast. So that sometimes causes the volatility and instability that we're seeing today.
So let me ask you this. The trust in the bank, right? Because I have a fear, all right? My biggest fear is this. As we see inflation rising, we see interest rates going up on homes, we see banks closing. Are banks really a place to, I guess, seek funding?
Okay. So when you say seek funding, because we're looking at banks for two different things, right? We're seeking funding and a place to hold our deposits.
Correct.
So, and I'm going to take this two different ways because I read an article over the weekend which I found very interesting. It said Hispanics, 20% of the Hispanic population, they don't bank in a traditional bank. Meaning they don't put their funds in a bank.
The actual money.
Actual money in a bank. And 15% of African Americans. To me, I thought that was a really large.
That's a big number.
That's a big number. 20% of Hispanics and 15% of African Americans, and is that distrust that you speak about, right? And what happens in this article? This is a little side note. Was talking about two banks in particular, Wood Forest Bank and First Convenience Bank. And so they're known for, and they carry a lot of deposits for minority communities, and it's almost like predatory banking. So what they do is they've actually put their locations in Walmarts specifically, and grocery stores and convenience stores. So in communities where it's easily accessible, they do second chance banking. And so what they do is they prey on the communities where they can get a lot of fee income.
So what is that? What is predatory lending?
Well, so instead of predatory lending, it's predatory banking. So think about
Okay,
this.
banking, I'm sorry.
What they do is they get all of the fee income from insufficient fund fees. They have the highest insufficient fund fees, and that's where they generate
Wow.
the majority of their income.
Wow.
So when we think about not trusting the banks, those are some of the things that we should be more mindful of because that's what's happening more so in our communities than anything else. So the government is really trying to be very thoughtful about how they respond to this crisis. That's why they made sure that Silicon Valley and and Signature Bank, that those people were made whole, right? Because the trickle down effect is so impactful when you think about all the businesses that will be impacted and the overall impact it would have to the economy. So one, that's the biggest piece, is to understand globally this is happening with Swiss Bank and all these other
Right.
banks, that the world is being very watchful and making sure that there's not an overall impact like we had in 2008. That's huge. But more importantly, we got to think about where we're putting our money, looking at those banks, how solvent are they, how are they capitalized. All of this is public information, and
Right.
we can find it on Google.
I didn't know that.
Yeah.
So I didn't know that banks get paid from. Well, I know they get paid, but I didn't know that large amount of number for them to be sufficient enough on insufficient funds and fees like that.
Yes. So
Wow.
Right. So if you've noticed, some banks no longer will even charge insufficient funds fees, which is a really big thing because then you understand, and it's important to know who you're banking with, right? What are they doing in the community? How much are they giving back to the community? And that will tell you a lot about who you're banking with.
But that's good because a lot of people don't know that they have community banks. Right?
And when you say community banks, a community bank can still be a large bank, but what does their outreach look like?
Right.
Because what we find, and I'm going to say this, and a lot of times this disconnect and this distrust comes from years and a history of not having the financial literacy that our counterparts may have.
Correct.
And so that's where we find, we grow up and our parents we call it mattress money in safes, money in different bags, coffee cans, and things like that. But we never had that trust in the banking institution. Comes from Jim Crow era, redlining, things like that. So we've always had that distrust with the financial system. And then things like this happen, and then again, we start to see it even more. But it's a matter of how do we educate ourselves to really understand how do we take advantage of, one, the borrowing power that's out there, and two, understand how do we have a relationship with our banking institutions so that we can take advantage of what's out there.
So I'm gonna get to that, the borrowing power. But I wanna ask this question, and in the back of my mind, I'm listening to the people that say aren't as fortunate as the fortunate. They say the lower class versus the middle class and the upper class, the average consumer, right? How is this going to affect this banking crisis deal? How is this going to affect the average consumer?
So the banking crisis itself, I would say, would not have as large of an impact. What we're going to see is, because right now, what could have the most impact is how fast the Fed is going to raise interest rates, which is happening regardless due to inflation, right?
Yes.
Inflation is causing interest rates to rise. And so right now it'll determine how fast they're going to raise rates, because it may slow down just a little bit, just so we can see, how much we need to stabilize the economy right now. But we know rates are going up. We've seen it. I think we're looking at another quarter of a point coming the next week, but we'll just see what happens when the Fed meets again, just because we're trying to see how do we respond to something like this, because we've seen the markets kind of, we've seen that volatility come following the closure of those three banks now, because First Republic had to be bailed out by several other banks.
Okay.
Did you see that too?
I saw. It was talks about
Yeah.
some banks coming together and buying.
Yeah, so several other banks, of the larger banks, put in for First Republic to make sure that bank could stay viable. So as all of this is happening, the Fed is going to have to be able to reevaluate and determine what's going to be the next step when it comes to raising rates. But the raising rate environment has a bigger impact on those people who may be looking to purchase their first home. So when you talk about where you are in the socioeconomic ladder, that's when you think about, well, my first time purchasing a home, or I'm buying a car, and rates are so much higher, now I can't afford as much house. I can't afford the car that I could have purchased last year. So that's when it has the bigger impact.
So you said a couple of things that I want to touch on, because I know people have these conversations around their coffee table, around business meetings, and potential buyers, potential lenders, everybody. And one, do you think that the federal government should bail out like a bank like a Silicon Valley with that amount? Do you think they should bail them out?
So they didn't bail out the bank.
Like, not, well, I didn't say not bail them out, but more of have some type of collateral stating, okay, we're going to subsidize these funds in return for a higher interest rate to us.
No. So in this instance, we'll talk about Silicon Valley Bank. They made the consumer whole. They made sure that the individuals who had and the businesses that had their money there at that bank were able to get all of their deposits back, right? And unfortunately, the bank, is no longer. The bank failed, right? It wasn't too big to fail. That bank is
it's gone.
It's gone. So they didn't bail out the bank. However, they ensured that the people who had money in that bank were able to get their money back. The reason why, right? Imagine, and some of our biggest tech companies actually had their money there. So you think about that, the number of people who would not have gotten paid for the following week, the number of people, those businesses that would have closed and collapsed if that money would have been gone. So those are the reasons why they had to do that, because the impacts to the overall national and global economy would have been huge. So that's why that had to happen. Now, overall, right, we think about big bailouts, that's something that's on another scale. We think about 2008 and how that had to happen.
I'm going there because I'm going because the reason I asked that question because in 2008, as we know, I think the GDP was in a negative in 2 quarters.
Yeah.
And we just had that in 22. And I think coming up on this next quarter is going to be in negative too. So this is going to be the first time in American history that we're under the GDP in the negative in 3 quarters. So that's considered as a recession, right? If we're in a recession, is it important to still bank? Because the thing is, it's like, okay, we don't have, like, the banks don't have the funds to lend, and if they do lend, it's at a rate that you can't even afford. It's like ridiculous.
So my question is, what is your alternative?
That's the question. I don't know. That's why.
Because when you ask the question, should we bank? Well, then I'm asking, so what is your alternative to banking? Know. So absolutely, I
a reset, a big great reset, and start off from the beginning and just say, okay, let's start off from the beginning and determine the averages and determine what's valuable from the beginning, because it looks like it's doing that. Because the thing is, as things go higher and higher and higher and higher, only a certain type of people could afford it, and they're not going to buy it because they understand that we're not buying a case of eggs for $25. We're not doing it.
Yeah. So here's the thing, I consult with a lot of people who are, whether you're purchasing a building, you're purchasing equipment, rates are higher today than they were last year. Historically, are rates the highest that they've ever been? No. When I first got into banking, we were looking at rates.
9%, right?
Yeah, rates were much higher than they are today. And I mean, my predecessors will tell you, rates were double digits. In my first home that I ever bought, my first interest rate was 10%.
Yeah.
So rates have been much higher than they are today, but we have been very fortunate to have experienced rates in the 3s and 4s.
Yes.
But so, yes.
Thank God.
The rates are higher today, but rates will go back down. It's all cyclical.
Okay.
So the thing that you have to always keep in mind is this is a cyclical process. And so when you think about borrowing, because you always want to hold on to your liquidity.
Yes.
Right?
Yes.
And so you have to always think in terms of, if I borrowed today, will I be in a position to refinance when rates drop again? So that's what I always tell people. Yes, am I going to borrow money at a higher interest rate today?
You would? So you would?
Absolutely. Absolutely.
Because I was going there.
So when you think about uncertain times, right? You think about a recession. That's what we always uncertain times, because we don't know how long the recession could last.
Right.
We don't know what these times would look like. So would you want to, purchase something using the liquid money that you have, or would you want to then extend money, borrow money that would allow you to have more money in your pocket as the uncertain times come?
So
you could tap into.
I'm not a financial advisor. That's my disclaimer. And what Adam would do, what DJ KO would do, this is what I would do.
DJKO.
There you go. Shout out to DJKO, man. Nah. But no, honestly, what I would do is this: I would never spend my own money ever in life. But that's my rule. I will always use it as collateral against it, but it has to be some type of incentive for the interest rate that I'm paying on this money. Is this an offset of something else that I have to offset that interest rate of that amount that I'm going to pay over the amount of years? That's me, though.
Yeah.
But I'm not a financial advisor because most people believe in debt-free, use all your capital. Dave Ramsey, I'm not using no names, but I'm like, that doesn't make sense to me.
Right.
Because you're going to have everything paid for, but you ain't have no money.
Exactly. But, also, and again, this is no knock to people who follow those philosophies, Dave Ramsey and whatnot. But it's also, again, part of how we were raised a lot of times where we don't want to have any debt. We don't believe in debt. We use cash for a lot of things. But what happens, and I'm a business banker and I've grown up in the banking industry. Mm-hmm. But when it comes time for expansion, right, and you've paid cash for everything, and there comes time when you need a large piece of equipment for your manufacturing business, or you need to buy a building because you've expanded to the point where you no longer fit in those four walls that you've been in all these years. You don't have that credit built within the business, or as a homeowner, right? You've not built credit to be able to purchase the home that now you have 5 people in your home, in your family. Mm-hmm. It's important that we think about credit and what that means in a capitalist society, in a society like the United States. Credit is a critical piece of it, and so I always say, to borrow money is not a bad thing. Mm-hmm. And yes, interest rates are higher. Again, it's cyclical, and rates will go back down. You see rates are high on your credit cards right now, but it's a revolving rate, and rates will go back down. So it's important, and credit cards are important because yes, I tell everybody you should have credit cards, but you should pay them every month.
Because right now, with the credit card is like the highest it's ever been for as in debt.
Yes,
it's what you just said. It's the responsible spending because most people get those credit cards and they just go crazy.
Yes.
It's not free money.
It is not free money. It's not free money. You use them for the benefits, the rewards, and to build credit so that whether it's for your family, whether it's for your business, you're in a position where you can take advantage of what's out here and live this American dream to expand for your family, for your business, and grow. And I just want to say one thing. The biggest thing that I think oftentimes that we miss is, when we started from the beginning, is that financial literacy piece. And so whether it's around building credit, mm-hmm. taking advantage of the borrowing power that's out here, whether rates are high or low, we have to build at start from the bottom. So whether it's getting that credit piece and understanding it, I always recommend Fig Restoration is a great place.
Shout out Muncie. Hey, Muncie. Hey, shout out
Muncie. Credit consulting, credit repair, whatever you need to understand. And then Hello Breakthrough is a great way if you need to understand budgeting. All of those things are just really important to me to start from the bottom. And then just understanding banking. Get you a banker that will walk you through to understand what does it look like to build from the bottom up. Or if you're already up, how do you get to the next level?
I want to ask you this. Mm-hmm. Right now, our current situation, right, and the average person that comes to see you, mm-hmm. right, do you think that it's going to get more complicated in terms of credit? Like, say if you have a 700 credit score, which is, it's okay, mm-hmm. but you think it's going to get, more difficult to get, a lower interest rate? You need a higher credit score?
So
I guess the terms, the regulations, or whatever it is.
I don't necessarily think in terms of just the credit score. So a lot of times we think only in terms of the credit score. It's going to get more difficult because as interest rates are higher, your debt to income ratio is going to come into play more, right? Okay. Because like I said, your borrowing power is going to shrink just in the sense of now rates are higher. So I may only be able to afford $400,000 where before I could afford $500,000, right? Just because rates are going to be higher. So you got to think in terms of that. So when you think about credit, you're not just looking, it looks at your character. It looks at all of these different things. So your credit score is character. How often do you pay your bills on time? How overextended are you? Those things come into play. So that's where the score comes in. But it's going to become more difficult in terms of as the interest rates go higher, how much can I afford? How much do I have to look at? how much am I spending in other areas so I can bring that down. So whatever it is I'm trying to borrow, I have enough room that I can get exactly what I'm looking for.
That's good information. It's vital.
Yeah.
I want to take it to real estate. I know, I don't know if you, well, you in that lane too.
You can ask me if I don't know. I'll just tell you I don't know.
But real estate, because I heard you mentioned something about commercial real estate. Do you think that right now is a good time to invest into real estate? Because everything now is upside down.
Well, so
as far as residential, let's say that residential stuff.
Yeah, so that's not my area of expertise.
Okay.
Now, if you have, this is a time when I would say, if you have the ability, because we've been in a seller's market for so long. Right. I remember I was looking to invest myself, and anything that I found that I was interested in, it was a bidding war. You had to go over the asking price. Now, because there's more inventory and things are sitting longer, you have an opportunity to go out there and actually take your time, look for what you want. There's more concessions being offered. So in that aspect, I would say yes. Now, depending on if you have the availability to be able to pay cash, which again, I'm always the person to say, hold on to your liquidity, but it depends on what your portfolio looks like.
Correct.
Right? Everyone is not in the same predicament. So depending on what your portfolio looks like will have a lot to do with that. And also, I tell people all the time, there's a lot of programs out there that take in consideration that we are in an inflation environment. Rates are higher now. They will go back down. So be mindful of that. So these programs that are out here that will lock you in the interest rate today, but then they give you different benefits that will look at the interest rate later on, and then you can refinance and not have to pay as many out-of-pocket fees for the refinance. Those are things that you want to look at. Talk to your mortgage broker, talk to your real estate agent, and figure out what's going to be the best way to go about that.
The reason why I ask these questions is because people are fearful, especially in terms of their money. The money that they work hard for, the money that they earned, or the money that they was granted or willed down to them. They're fearful on putting, especially if he wasn't taught, if he wasn't taught the right things. They're fearful.
Yeah.
So the question I want to ask, and this is the question I think a lot of people are asking. I ask the same question. Is my money really safe in a bank?
Well, your money is safe because we have the FDIC.
Okay.
So the majority of us don't have more than $250,000 sitting liquid in a bank.
Correct.
That's the majority of people. And the FDIC does have on their website ways that even if you do have more than $250,000, that you should look at how to structure your money. So there's different ways you can structure your money if you have more than $250,000 in one bank, that you can ensure you have the right coverage, because obviously what happened in these other banks did deplete a lot of the resources that are out there in the federal government. So we need to be mindful of that. But then also go to the FDIC website, take a look at it. It's free. You don't have to do anything. You literally plug into the calculator how much money you have, ways that you can structure your accounts, but look at the solvency of the banks that you're working with. And this is one of the things I tell people all the time. You can go online and it'll tell you how these banks are ranked, how well they're capitalized, and it's important that you understand that. A lot of times you say, I just want to be with a small community bank because I know Joe. Joe will know me.
Yes.
Joe might be cool, but that does not mean that that bank is going to be able to withstand difficult times that we're going through like we are now.
Correct.
So it's important to know the bank that you're banking with and understand that your money will be safe.
That's good. I'm glad. Look, you guys need to listen to this because
and not every bank is FDIC insured, which I did not know that. So look for that everywhere you go. A lot of times right now because there are a lot of banks that are online banks that are offering higher APY. So I've been looking for that myself. I get it. We want to shop around, and because the inflation is so high, look for FDIC coverage. Ensure that that is there. Do not just put your money somewhere for the sake of getting a higher return.
Well, I know, and this is I'm not giving a shout out, but Navy Federal, they're pretty good, to me. I'm just saying, maybe you not work for the government or the military, but Navy Federal, hey, shout out to Navy Federal. But anyway, before we get out of here, because the thing is, I didn't even tell the people what you do. We just jump right into it, right?
Here. But so I am a business banker. I've been in the industry for over 20 years. But I work with business owners who, in a range, whether you're a professional, you can be in the medical field. I work with people in manufacturing, all different things, just to ensure whether it's your depository relationship, you need lending. We do all those things to ensure that you have all the tools you need to grow your business.
That's good. That's good.
That's what I do.
So how can people find you? well, not particularly you, but somebody in your field or a team
Absolutely.
or somebody that does what you do in their community.
Yeah, so so you can go online and find us, or I am on Instagram at Journey with Zsa, ZSA. If you want to find me directly and DM me for any questions that you may have around banking or just how this crisis specifically can impact your business, your industry. We do have a lot of tools to kind of walk through industry verticals and how that would impact you, because a lot of times people want to know, we know transportation is one of those industries that may see, some more headwinds. So we just want to be very proactive and understand how we can assist in many ways.
That's good. That's good. Guys, make sure you go holler at Zsaqeuz over there at Texas Capital. If you can't get to her, if you're out of state, make sure you know who your bankers are.
Know your bank.
And the ones that's going to help you out, because a lot of bankers do not help you out.
Yeah, that's important.
That's very important.
Well, this is something I've been preaching on for years. You should have a relationship with your banker. I don't care where you bank. I have been at various institutions. It's important. You should have a relationship with your banker. Your banker should know you, your family, your business. I don't care if I had a restaurant, I know who's in the front of the house and the back of the house. It's important because as things change, your business banker should be changing along with you to know what solutions are out there within the industry and within their bank. So that's important for you to know. So if you have any questions, let me know. I can connect you with the right people if it's not within, the space of what I do, but we want to make sure that we have everything we need, especially during these uncertain times.
That's beautiful. That's beautiful. And before we get out of here, I'm going to ask you, even though I know this is not your bandwidth, but I'm still going to ask the question.
You can ask it.
Your prediction. Give me your prediction in the next quarter.
Okay.
What do you think the interest rate is going to be?
Ooh.
I know you don't control that. That's outside of your,
Yeah, I do not control that.
But your expertise and your number, and you've been in this business for 20 years. So.
But I do expect that we'll see at least another 0.5 point increase within the next month.
Okay.
Yeah. So we're going to continue to go up, and then next year we should see, we'll go back down. So we're in for a long ride.
Yeah.
For sure.
So if you have some money, just relax for a second. Just relax. It's going to be okay.
Again, this is all cyclical. The biggest thing is for us not to overreact. I tell people all the time, don't overreact. Ride the wave. People will get, very anxious about their 401k. I don't even look at mine. It's going to, everything that goes up must come down. It's like a roller coaster,
That's
right? True. We were all so excited. Like a 401k, and then people were attributing to the president at the time. The president does not control the market, right?
Not at all.
Not at all. And it's just a matter of just allowing the cycle to run its course, and that we have the right people around us to advise us, whether it's what's happening in the market, what's happening with the industry that we're in, our businesses, and all the things. So just surround yourself with good, solid people, get the knowledge that you need, and if I can do anything, I'm here, and I have a wealth of people behind me that they know their industries as well. Mm-hmm. So I like to plug people in with the right people, and we definitely can make sure that we connect.
And relationships are everything. So if you guys can't get in touch with Zsaqeuz, y'all call me. I can get in touch with her anytime, so it's all right. Just call me.
Yes.
Now, but it's, I got to get it's her, she got to tell me yes or no, so it's on y'all. You know what I'm saying? So, guys, but this is the show. I'm glad you guys tuned into the show. I hope this information helps you out, which it will, because I know a lot of people have questions, and we talk about it all the time, especially with my buddies. We talk about it 24/7 because we're concerned about our dollars. One more time, Zsaqeuz, before you get out of here, what's your information and how can they find you?
Yes, so you can find me on Instagram at Journey with Zsa, ZSA. It's the easiest way to connect with me. Just connect with me on DM. My LinkedIn is my first name, Zsaqeuz Jordan. So either way, I'm available on social media.
Don't hit her in the DMs trying to holler at her, okay?
No, not that.
We talking about business, all right? Guys, look, I appreciate you guys for joining the show. Make sure you tell a friend to tell a friend. If you haven't, subscribe. What you guys have. You guys have been very supportive, and I appreciate you, and I love you guys, This is your boy, DJ KO at Coffee Distinct. And my new slogan for the year is, don't get hurt and don't get caught. Peace out, y'all.